And we are live. Um, Good morning. I am Anton Stetner, and today we're going to talk about one of my favorite things to chat about. We're going to talk about real estate statistics. We're going to talk about King County, Snohomish County, Pierce County, Skagit County. We're going to talk about anything that you want to talk about in the real estate market. So, one, let me know if you can hear me because I was struggling turning everything on this morning. So, you always want to make sure. So, if someone can just say yes in the chat, that would be awesome. And we're at a very interesting time here in the market. So, we're going to talk about a couple things. We're going to talk about this idea of what's happening inside of the macro real estate market here in the Seattle Metro today. We're going to talk about uh, parts of the market. I should have said micro. We're going to talk about the micro local real estate market, but we're also going to look at the macro market as a whole too. We want to look at the things that are affecting our local area. And that's interest rates, that's the Federal Reserve, that is inflation, and those things. And so, what I always want to do is I want to start off by, kind of looking at this from just a macro level. And why should you care? We care because this directly impacts our local real estate market. Everything that impacts the local real estate market is the economy, rates, inflation. And then why should you listen to me? I've been selling real estate here since 2003, literally been involved in thousands of real estate transactions and closings. And we do land development, new construction. So we sell real estate, we do land development, new construction, we do hardcore investing. And I just love chatting about these numbers. So I want to share kind of what we're seeing in the numbers so that all of us can get on to the same page. The 10-year treasury is really what sets the rates for mortgages. And I like to look at this over the last 3 months and ask yourself a question like, what has been happening with the 10-year treasury? And the answer is the 10-year treasury, as you can see, is trending in a downward direction. And why is it trending in a downward direction? It's trending in a downward direction because the bond market is responding to the data that's coming out in front of them. And what the bond market is saying is they believe long-term we are headed towards lower rates. Oops, I hit the stop sharing. I got to keep sharing my window. Boom, share, perfect. That we are headed towards lower rates. And you can look at this right here, the Federal Reserve's website, and look at it over the last year. This is the spread between the 10-year treasury and 30-year fixed debt. And so you can see we've been hovering lately right around 2.3. That means we can take this 10-year treasury and add 2.3 to it for the spread that banks are providing right now. And that gives you about what 30-year fixed debt is today. That spread, because during the crisis, during the 2022, as the Fed jacked up interest rates, that spread hit over 3%. As this spread collapses, regardless of what the Federal Reserve does, that brings down interest rates, and you see it going down to 2.3. Traditionally speaking, that spread is sitting at about 1.8. So first point I want to make today, there's about a half a point available to us in the future that's still sitting in spreads. Point number one. Point number two, the Federal Reserve, because we just had CPI and we had PPI. PPI came in and was actually deflationary. PPI is the producer price index. That's what producers pay. So if they're going to sell a water bottle, that is the amount that they pay for the material for the water bottle is going down right now before they sell it to the consumer. CPI came out today, and it did come out a bit hot, but the Federal Reserve at Jackson Hole was very clear. They said labor over inflation. They have a dual mandate, labor and inflation. They've switched over to more of the labor component because the labor market is getting weaker. So what does that mean for us? It means we can go over here to the CME Fed Watch tool. And on the CME Fed Watch tool, you can see that right now we have an 88.88% chance of a 25 basis points or 0.25% cut from the Federal Reserve at the next meeting, which is literally next week. So the market has probably already started pricing this in. But because this weakness is showing up, now there's an 86% chance of another cut in October and a 80.3% chance of another cut in December. That means when we look at these rate cut charts, what that means is there's 3 rate cuts sitting in front of us for a total of 75 basis points. The Federal Reserve doesn't necessarily guarantee that rates will come down, but we could see between 25 to 50 basis points there, and there's a quarter sitting in the spread, or excuse me, half still sitting in the spread. So what's happening with today's interest rates? Well, rates today, so I like looking at this. It's just a quick way to look at it. Mortgage News Daily. You can see we're sitting at 6.27. We were just at 6.5. Now for our VA buyers, they are just under 6. Our FHA buyers, just under 6. There is all kinds of data that demonstrates that as the market gets to the lower 6s, the market picks up. August was a little bit of a slower month. We felt the market moving towards the end of August. And then I was telling all of my team members, hey, get ready. We actually had a banging finish to August, and we've had an unbelievable start to September because we know rate cuts were coming and that rates were going to continue to trend down. So mark my words. 1, the kind of semi-buyer's market we've been having here in the Seattle metro is getting ready to start to end. 2, as rates continue to trend down, this little bit of excess inventory that we've seen hit the market is going to go away. And then in the spring, we are most likely going to see bidding wars again as we go into the hot of the spring market. Ricky Bobby, we will hit you on Yakima. Thanks for dropping that in the chat. And then anyone, if you have questions about what we're talking about, questions about the market, this live is done for you. So I always have a couple things I want to chat about, but drop your questions into the chat about markets you want to look at specifically, questions about home prices or home value or interest rates, questions about investments, and I will do my best to answer them here in the next hour with you guys. So without a little further to do, so we talked about rates, we talked about spreads, and now what I want to do is I want to go in and look at some of the data specifically so that we are on the same page. Let's go in and look at King County and see what's been happening in King County as a whole. Now, King County, let's just be blunt. King County is the center of our real estate universe, with Seattle and Bellevue being the 2 epicenters. And then what happens is we essentially have these concentric rings that move out from there. The further you go from the epicenter, the quicker a market can cool off, the more jobs, the higher prices, they're all located there in the epicenter. So what's happening in King County? King County median sales price last month was $875,000. That is an unbelievable number. King County's average sales price, 1.111. It blows my mind that the average price in King County is now $1.1 million. That is just so high. It's unbelievable. Let's look at the number of new listings. Number of new listings Oh, I should also point one thing out. I like to look at this data monthly. So let's go back to sales price, because you can see the actual ebb and flow inside of the data. A lot of times what people do is they look at it on the rolling 12, and this is what a lot of economists report to people. So it shows 2.9% month over month. But if we look at it monthly, we also get to see the seasonality. And these dips are always in the winter. See that? See how it gets lower in the winter? There's November, December. So the lowest was actually at the start of this year, where the average price in King County was $1,024,000. So when someone says, like, I want to get a deal, or when's the best time to buy here in the Seattle metro, it's actually pretty obvious. It's always in the winter. Why is it in the winter? Because it's gray out, it's raining, no one wants to go outside, and it's the holiday season. We want to sit inside and eat. We want to have our snacks. All right, let's throw our charts back up. New listings up 3.6% over last August. Homes for sale. Now, this is where, see, nationally, they've been talking about this. They've been talking about that rise in inventory. And we also saw it here too in the Seattle metro. We saw the rise in inventory that everyone else is seeing. And this is true for all across the state. But that rise in inventory doesn't necessarily mean a drop in prices, because we were at such a low level of inventory. Us getting the slight rise in inventory and even having it up be 34% is generally not enough to cause prices to pull back, because the demand here is so high. Let's look at pending sales, up 12.4%. Okay. What was interesting is when we were looking at the data last month, the pendings and the closed. So closed is still down 3.1% versus the same time last year. Now, this is evidence that the market in King County has been slowing down, or is in the process of slowing down. When I say slowing down, I mean going from white hot, red hot to you have a little more time. Not everything is a bidding war. However, the best properties will still be bidding wars. If they are the best properties in the best location and there's no inventory there, that's still going to be a bidding war. If you guys have questions about King County, drop it in there. Other areas, drop them in. I'm happy to go through it, but I'm going to keep working through this as you and I keep chatting. All right, what's the average days in market in King County? 33 days on the market, up 43%. What's really funny is we're so used to a white hot market. See, this is when a lot of agents got into the business, 2020, 21, 2022. And so they're so used to everything should sell in 2 weeks. And that's not normal. So right now, the market is returning to more of a normal market, but I believe it's short-lived. In other words, I believe the quasi-buyer's market that we had here in the Seattle metro is in the process of ending. And why is it in the process of ending? Let's go back to our previous graph so we're on the same page. It's because the 10-year treasury is trending down. This trending down right here means mortgages get cheaper. Look at it over the last month. It went down from 4.32 to 4.01. Mortgages went from over 6.5 to literally 6.29 today as we looked. That's why the market is changing. Below 6.5, our metro picks up steam. We were not in a real estate price recession. We were in a transaction-based recession. We're selling the same amount of homes right now we did literally at the end of the great financial crisis. All right, let's go look at closed sales. I'll show you what I mean. Let's go out to 10 years. And you look right here and you go July 2025. And you go, wait a second, all of that in July is above that timeline. Let's go max. Oh, we got to go all the way back to 2010, 2011. Okay, we beat it in 2012. So when we start talking about this idea of we are in a transaction-based recession, realize King County and the Seattle Metro right now is selling the same amount of homes we did in 20 freaking 12 at the end of the great financial crisis. I was asked on TikTok if now is a good time to get into real estate. I will tell you, this is probably the second best time to get into real estate. Why? Because we're at a transaction bottom and rates are starting to trend down. What that means is as rates trend down, there creates the ability for more buyers to qualify, which will cause transactions to go up. But due to the lack of supply, you're going to then also see prices start to increase faster. Molly, I see the ones that you want me to hit. We will go there next. Throw the chart back up. Percent of original list price. This is always good data. Let's bring this down to the last year. The historical percent of original list price is around 98%. Percent of original list price can be thought of very simply as when we look at this data and it says 97.3. If the property was listed for 100 grand, it means it sold at $97,300 last month in King County. And when it's below 98, you know it's starting to get into a buyer's market. And once again, I believe that September's data is going to prove to be better than August because of what I'm seeing in my own personal businesses, what I'm seeing in the brokerages we own, and then also in the deal flow that we are seeing. Throw this back up. Price per square foot. $535 a square foot. The average property needed 13 showings to go pending, but they only got 4.7 showings. Now, if your property is on the market and you're a seller and you are positioned correctly inside the market, you are in good condition, and that you are being marketed correctly, and you're not getting enough activity, then the only other lever that you have left after that is price. You've got to start pulling that price lever. And that's why you see this original list of sales price coming down, because it got very slow there for a moment, but then rates started coming down. All right, we're going into Snohomish County next. In the comments, AKA the chat, let me know what you want to take a look at, and we will go there. Let's throw Snowco up on the board. Snowco. The median price in August 2025, $745,000, exactly what it was last August. The average price, $816, basically exactly what it was last August. So month over month, Snohomish County is flat. Now, I will tell you, there are pockets in Snohomish County on the month-over-month data. And Molly kind of already mentioned one, so I'm going to throw them up here. She said she's interested in WTH Batman is happening with Marysville over 700K. I will tell you, Marysville over 700K, because of the new construction up there on the hill, putting pressure on pricing, that inventory was forced to reduce its price. As it reduced its price, of course, then resale values also squished. Month over month in Marysville, in the higher price ranges, saw a negative number in August. Now, don't count me out. Don't count me wrong, because I believe that that's going to get eaten again right here in September. But yes, it was very hard for Marysville. And it wasn't just Marysville. There were other areas too. So for instance, if we went to Bothell and we just moved, essentially doubled that price range, there were pockets of the exact same thing. So the thing about real estate is always location, location, location. And if you have questions about a specific market, specific neighborhood, and you don't want to drop it in the chat and you're watching this on the replay, hit us up, because we're happy to dig into the data to see what exactly is happening in that neighborhood. Because we need to do that if we're a buyer. We need to do that if we're a seller. Or we need to do that if we're considering investing our hard-earned money into those specific areas. All right. Back to Snohomish County. New listings. You know what? About the same. Almost 1,200 new listings last month. Homes for sale up 39.4%. That is almost 40%. That is a big, big number. Pending sales. Throw that back up on the board. Up just 2%. Once again, kind of that slowdown that we were talking about that we're seeing in the market. Closed sales down 8% versus last year. See, notice how we talked about how King County is the center of the real estate universe. King County was not as affected as Snohomish County in this little mini slowdown. Also, you guys see this on my stories on Facebook, on Instagram, TikTok, where I'm talking about deal season. Deal season is really going to come to an end over the next 6 months. These deals that we're having right now, that we're seeing, as these rates continue to trend down and as buyer confidence returns, the market is going to light on freaking fire. Now, it doesn't mean it's happening today, but I bet it's going to happen by spring market of next year. So we've got a unique opportunity here at the end of 2025 for my buyers, for my investors, and for certain sellers, depending on your situation. All right, back to the data. Days on market, 32. Once again, kind of returning to a normal market. Month supply of pending, 2.9. Let's look at this over a longer time run. This is the great financial crisis. So when those stupid doomers say, oh no, the world's going to hell in a go-kart and prices are going to drop, realize we had, in 2008, what did we peak at in 2008? We peaked at 12 months worth of inventory. And today we have 2.9. It's intellectually dishonest to talk about the market being flooded with inventory when you have foreclosures at an all-time low, when you have builders behind the 8 ball, both locally and nationally. You've got developers behind the 8 ball, both locally and nationally. And when I say behind the 8 ball, I mean we are not building or permitting the same amount of stuff we were prior to the great financial crisis. We're missing 6 million freaking homes. And so we're about 4 years behind on new construction here in Washington State. I know that personally because we do a ton of it. And it would take a lot for this market to crash. All right, throw the data back up. Percent of original list price, make it easier to see. See, 96.2. So look at that. So July, normal. Spring market, hot, bidding wars, 100%. August, 96.9. I kept telling everyone we were getting deals. And we were getting deals for our buyers, for our investors, because people weren't looking. See, everyone wants to look when it's convenient and comfortable. That's not when the deals happen. The deals were happening in August when everyone was on vacation. Price per square foot. All right, the average price per square foot, $411. Shows to go pending, 11. And shows per listing, 4.4. And Ricky Bobby, you wanted to look at Yakima. Let's go look at Yakima. Let's see what's happening in Yakima. And I'm going to Yakima City. Actually, you know what? Let's look at the whole county. Or did we want to look at the city? Feel free to drop in the chat which one you wanted me to look at. Let's go here to the median price. Oh, you know what? Hold on. I forgot to do one thing. I'll come right back to you, Ricky Bobby. I wanted to look at the data for King and Snohomish County in a slightly different format. I wanted to look at it with the got to stop sharing that screen. I want to look at it on the month over month, but we got to look at it inside of these PDFs that we got here. Oh, there we go. Cool. Let's go to King County first. All right, let's zoom in and make this bigger. So When we're looking at King County residential, this is just a great way to look at it. Pending's up 11%. Days on market shot up significantly. But the average price really year to date up 2.6, or excuse me, 1.2, and the median up 2.6. What this is telling you is that if inflation's 3% right now, it's not even really keeping up with inflation. Does that make sense? Prices are basically flat when you factor in inflation. So the market's not rapidly appreciating. Why? The market's been slowing down because debt has been very expensive and the economy itself has been slowing down. Now, as the Federal Reserve eases their stranglehold off of the market, expect these numbers to pick up. Let's look at it in Snohomish County. Let's make this bigger so it's easier to see. So same thing, median price 1.3 and 3.2. Snohomish County is showing basically flat, okay, with days on market up and closed sales down. All right, let's go back over to Yakima. And once again, if you guys have an area that you want to take a quick look at, we're happy to do so. Add to the stage. Oh, I got to stop sharing that one and share the other screen back over here. Boom, we are back in business. Wow. Okay. So that's 12% month over month on the median, and the average. Whoa, average also. Okay, let's smooth the data, see if it shows us something different. All right. Okay. So this is something interesting to talk about in relation to data in general, is that I'm going to hide myself just so this is a little easier to see, is that when there is not a absolute ton of data, so let me go back and show you. This monthly, you get these spikes because of expensive properties or cheap properties. If we smooth it out, it's probably more reflective of the market because there's just not as much data there. So the median price is up 4.8%. Man, it's outpacing King County. Average price 5.1. New listings about the same as Snohomish County. Homes for sale, okay, up almost 30%. Pendings, whoa, up 30%. Closed sales, whoa. Actually, let's go back to monthly. Okay, about the same, but really overall trending in an upward direction. Wow. Days on market, 57, about 2 months to sell a property. About 6 months. This is very interesting. So one thing I would think about Yakima is experiencing right now, just quickly looking at this data, a bit of a housing boom, especially relative to the Seattle metro. And prices are rising faster, even though they have less inventory and even though it takes longer to sell something there. That's wild. Let me know if you have any more specific questions about that one. Molly, I'm coming to you. Interested in South Snohomish County, particularly Edmonds. All right, let's dig into Edmonds real quick. And then if you have a specific question about Edmonds, feel free to drop it on in. Okay, sales price, median. But so when we smooth the data and use a 12-month rolling average, up 6.6, 959,000, average, 1,055,000, 6.4. Let's look at it just raw. See, raw, it's kind of bouncing, but it started low. So that's really what's pulling it up. What this also means, just by immediately looking at this, Molly, as I look at this particular piece of data, it means Edmonds is fragmenting. In other words, parts of the market are moving and other parts of the market are not moving. And there was a period of time, it looks like in the winter, when there was probably lower priced properties on the market that were selling. And that's what's skewing this particular data set. So interesting. Okay, yes, I get it. I'm a super nerd. When you go so interesting on the data. Let's look at new listings. Down almost 20%. Homes for sale up 22%. Pendings down. And part of that is just a function of price. I mean, let's be honest. It's expensive to live in Edmonds. I mean, beautiful area. Actually, where I was born before we moved out to Arlington. So love Edmonds, where my grandma was at. Closed sales. Sorry, that was not an Edmonds. That was not like an intentional Edmonds dig. That was not like everyone who lives in Edmonds is an old white gray hair. But there is definitely a percentage of the population that's older that lives in Edmonds, Washington. Days on market, 31. Okay, a little bit higher. 2.2 months, a little bit lower. Let's go to percent of original list price. Look at that. Look at that. July, normal. Boom. People getting deals in August, like just getting deals. Oh, so you're seeing the fragmentation too. Yeah, it makes total sense. But man, they were getting deals in August. See, it's really funny the amount of hate I got on the magic internet, on social medias when I was like, this is deal season, go, go, go. And I was like, deal season is going to end because rates are going to come down. And everyone's like, no, inflation's too hot. Rates are never going to come down. And what did rates do? Oh, they started trending down. See, when you look at this data all the time, I'm reading the tea leaves. I've been looking at this data for 20 years. I can feel where it's going. Now, I'm not always right, but because I bet my own money in land development, new construction, real estate investing, and the stock market, I'm pretty freaking good at seeing where this stuff is going. And I'm happy to share that with you and along the journey so that you guys can make money in our market too. I don't know what we're laughing about. Was it the gray hairs? I love it. I love it. Okay. Anything else from Edmund? Shows to pending 15. Ooh. Shows per listing 5. Man, those Edmund buyers, they're stingy. They're stingy. They got to look at a lot of homes before they pick one. All right, who's next on the list? Oh, let's look at Moses Lake. Moses Lake. Oh, I love it over there. Got family over there. They're farmers. Beautiful area, great weather. Okay, throw this up on the screen. John, if you have any questions specifically, drop them in the chat as we go through Moses Lake. Sales price. The median sales price last month was $350,000 basically, and the average was basically $358,000. Not a lot of data there, so I'm going to smooth it. Ooh, look at that. 11.8% and 4.6 on the median. Moses Lake and Yakima coming in strong, boys and girls, coming in strong. They are beating up the Seattle Metro East Side represent on price. And then how do you guys feel about that on your end? Like, are you getting pinched in these markets? I mean, I could see people getting pinched because these prices are rising very rapidly, faster than I would have thought. That's what's crazy. All right, new listings. Wow, up almost 20%. So you got rising inventory. Homes for sale also rising about 35% up. Pending sales about the same where they were. Closed sales about the same. Days on market pretty much the same as Yakima, about 2 months. So, it's interesting, these Eastern Washington markets, less homes for sale. They take longer to sell, but they're appreciating faster. Wild stuff. Love it, love it, love it. And month supply of pending, 6.1. Ooh, that's a dichotomy. You guys are literally on the verge of this buyer's market, John. I mean, you're literally on the verge of a buyer's market. Probably parts of the market are definitely going to be a buyer's market and parts of it are not going to be, but your prices are still rapidly appreciating. That doesn't usually happen like that. Usually what happens, John, is as you get in that kind of 6-month range and it starts to switch to a buyer's market, that usually starts to cool down the appreciation. What it means is you're probably seeing an influx of population, people from outside the area moving to that beautiful area of Moses Lake and buying up houses, maybe even some second home and vacation homes there. Super interesting. Chat, drop your questions in. Let me know what part of the Seattle Metro you want to look at. Let me know if you want to talk about interest rates, if you want to talk about debt, investment properties. Happy to go through that. Let's finish up our chat real quick on Moses Lake, the percent of original list price. Let's make this the real raw data. Give me the raw data. 96. I'd say the average is between 96 and 97. Like if I was to draw a straight line there, it's probably around 97. So it was a good month in August. Look at that. The same plays out over there. Deal season is always around the holidays. Investors buy things around the holidays. Guess what we do? So my personal business does an unbelievable amount of business in November, December, and January. Right there at the end of the year, because we also represent a lot of investors, a lot of first-time home buyers, and I'm a hardcore investor. So we try to buy a whole bunch of stuff at the end of the year. And what Moses Lake is showing you is December of 2024 was the absolute best time to buy a home in the last 12 months. That's wild. And price per square foot, $221 a square foot, shows depending, 1.5 showings per listing. Whew. It feels like Moses Lake should be a buyer's market. Moses Lake is popping. Straight popping. I got to take a little drink of water. And like I said, drop your questions, chat, and we will go through them. Kelsey, what do you predict interest rates will be by the end of the year? So if I could predict exactly what interest rates will be, I would be day trading all day long and going to the stock market. And when I stopped by 7-Eleven to buy my my lotto ticket, I would have won the 1.8 billion. But I didn't, and that was just rude. Like it was rude that I didn't win that. But here's the educated guess. Here is the trend. And realize there are things that can affect the trend. And we kind of went over this a little bit earlier, but it's worth repeating for people who are just joining, because this is so important. The 10-year Treasury sets the trend. And let's go year to date. And you can see throughout the year, this is trending in a downward direction. And right over here, right here. So let's go to the last month. This is the bad jobs data coming in, and this just dropping. If I go to 5 days, it's pretty clear. Look right here. See the cliff? That's the bad jobs data. This has brought us down to 6.29 today. Oh, it's changed since we looked. We're at 6.27 now. Look at that. So we're at 6.27. And we believe the Federal Reserve is getting ready to cut. So I believe by the end of the year, you are going to be somewhere between today's rate of 6.27 to 6.125. And if we're lucky, you might get into the low sixes. Okay, now if we get really lucky, the problem is really lucky is bad in this situation. Here's what I mean. It'd be more bad economic data. It would be the economy slowing down even more. But with the Fed talking about 3 rate cuts, with the mortgage spreads happening, theoretically is actually possible to get the traditional 30-year fixed into the 5s. And the traditional 30-year fixed right now for the FHA and VA is already just under 6. And so that means for the first-time home buyers or for the FHA or the VA buyer, or even the regular conventional buyer, With just a little buy down, you could very easily be in the fives. And all of my baller mortgage friends, they're already getting calls for people who have some of the higher rates, and refinances are starting currently. I do believe by first quarter of 2026, we will be in the low sixes and possibly the upper fives. That's why I'm telling you the spring market today, based on the data today, is going to be a banger. All right, we're going into Spokane next. And then let me know what you want to look at, and we will take a look. Spokane, Spokane, Spokane. Hide this. Throw this up on the stage. Oops, I got to add it back to the stage. Sales price. Let's smooth this data out. 6.3, excuse me, on the median, 425 in August. Average was 528. Ooh, trending slightly down. Let's look at the raw data. Oh, interesting. Yeah, trending slightly down. Super interesting. Okay. Didn't expect that. New listings up 41%. That's a lot of new listings. Homes for, whoa, 81% increase. Let's look at the raw data. Let's go to the monthly. Yeah, I mean, big spike. Rolling 12 pending sales, closed sales up, days on market 41, not bad. Month supply of pending, interesting. So let's go to the raw data real quick. So last year, it really turned into a buyer's market there in the summer, and then cooled down this spring, and it's headed back into a, if this continues, so this is going to be interesting. This is going to be very interesting to see if the rates cause this to do what it did last year, in other words, inventory to rise, or if the rates start eating up this little bit of excess supply. Daphne, yeah, I'll hit Spokane Valley right after this. No problem. No problem. Really interesting. Let's go to percent of original list price. Percent of original list price, 90. Ooh, I'm getting deals. Yeah. So Spokane was definitely slowing down. Price per square foot. All right, let's go into Spokane Valley. Spokane Valley. Because we wanted to look at Spokane Valley. Spokane Valley. Boom. Could also do the whole county if you guys need me to do the county real quick. Rolling 12. Median. 445. Basically flat on the average price. Median. Ooh. Or excuse me, average dropping. Whoa, let's look at the monthly. You've got these big spikes in the average. You'd have to dig into this a little bit more, but this is trending in a downward direction. So part of Spokane Valley, and this is probably what we were talking about exactly like Edmonds, is I'm taking an educated guess right now. But the educated guess is this market is fragmented. Part of it is moving and doing just fine. And then the other part is not and is depreciating. In other words, there's places that there's going to be amazing deals. And then there are places that are, going to be hotter. And let's look to see, let's go to percent of original list price real quick. So it's still 97.3. That's on the rolling 12. Let's look at the monthly, 97.2. Interesting. Bidding wars. This data is all over the place. Yeah, I honestly, Daphne, I'm going to say this, is that we don't have the best data over there. And so, you know what? Maybe the Redfin data center. Let's just jump on that one and see if they've got some better data. And because I don't know if they hit that one. Metro, all Redfin metros, Spokane. Oh, they do have it. Okay. All right. We're going to look at this from a different data set that might have a little bit better data because the NWMLS does not have everything in it for Spokane because there are multiple MLSs there. All right. So let's take off these other years and just look at 2024 versus 2023. 2024 is the orange and 2025 is the blue. New listings up 10%. Okay. Pending sales down just a little bit in August, but really it looks like it's pretty much mirroring off the market in 2 weeks, aka off the market quickly. A little bit slower in 2025 versus 2024. Homes sold year over year 5.7. 5.7 in homes sold. So just slightly more than the previous year. The median listing price up 4%. Median sales price up 4%. Days to close. Yeah, so what this is showing, this data set is showing that not as rapid of appreciation and the market performing slightly better than 2024. And I would expect it to improve into 2025. No, thank you. Thank you. You want to look at East King. East King, is there like a city specifically or just we want to look at East King in general? You're going to make me think about these maps. All right, let's go to Fast Stats. Let's go to King County. Let's just grab a couple of these. East King. Let's go to, let's go all the way to Snoqualmie real quick. All right. We'll grab Snoqualmie. We'll grab North Bend. And we'll grab Maple Valley. And then I got to stop sharing that one. And I will share this other one. Oh, East King, you want Bellevue and Kirkland. Oh, all right. Okay. Well, that's a different story then. That's not as far east as I was thinking, brother man. That's not as far east. I went all the way to the east. All right, Bellevue and Kirkland. Let's add this back in, share the screen, go back to the window. Let's go into Bellevue, aka one of the other hearts of our real estate universe in Bellevue, Washington. The median sales price last month, $1,524,000. Wow. Average, basically 1.8. Let's look at it on a rolling 12, up 6.3% and up 6.7%. Bellevue is obviously outperforming King County. And obviously, well, you just said it. Thank you for dropping that in the chat. It's all about the big money. There's so much money in Bellevue that Bellevue market is out appreciating King County. And that's why I said when we're buyers, when we're investors, and we're sellers, we got to dig into the data specifically because we're also right now just looking at the whole city of Bellevue. And there are guaranteed pockets inside of Bellevue that are performing even better than this and some that are performing worse. The problem with data is we're taking a full look at what we see. And you guys got me for another 10 minutes. So if you want more, drop it in the chat and we will finish up with Bellevue. New listings up 25%. Homes for sale 53%. Pendings up 2%. Yeah, not as fast as King County. Closed about the same. Days on market 24, aka 3 weeks. 2.7 months worth of inventory. Let's go to percent of original list price. Let's make it monthly so we get the raw data. 97.1. But look at that. See, because these really desirable areas, it's that adage of location, location, location. And Bellevue's showing it to us right here. Bidding wars right there. I mean, basically, when it gets above 98, it's a bidding war. So February, March, April, May, June, July of 2024, 2025. It was, ooh, it looks like it started January, because January, February, March, April, May, and then maybe some in June. July was okay, and August was probably a better one. Once again, Bellevue's showing the same trend. It's best to buy in the winter if you want a deal. $733 a square foot. Shows to go pending, 18. Average showing, 16. Same thing as Edmonds. Matter of fact, worse than Edmonds. Picky buyers, picky buyers. All right, let's look at Kirkland, Washington. Throw you up on the board. Sales price, 1.3. You know what? Let's smooth this data. Up 4.9, 1.375 is the median. And remember, median means the middle. Average is the total added together, but divided by the number of transactions or households. The average is 1.6, up 4.6. So Kirkland's slightly beating inflation. Bellevue is definitely beating Kirkland. Always interesting to see, these little trends pop up. New listings up 22%. Homes for sale, ooh, significantly up. Pending sales, barely up 5%, but a lot of homes for sale. Closed sales, basically flat. Days on market, 25 days, aka 3 weeks. Month supply of pending, 2.6%. Of original list price. Let's go and dig into the monthly. Ooh, look at that. See, the new listings in Kirkland made it deal season in August, and people got deals in Kirkland. I love it. Love it. Now, also, that probably showed up right before August, so some of this will trail, because when somebody puts something under contract, it closes 2 weeks, 30 days, 45, 60 days later. So it doesn't usually necessarily close right then. Price per square foot, $721 a foot. Shows to pending, 17. And the average listing got 5 showings. That is pretty crazy. Okay, so you want to look at some waterfront. Let's go to Kirkland Waterfront. Kirkland Waterfront. Throw it up on the board. Hoo-wee. The median, look at that jump. The median sales price for Kirkland Waterfront in August was 2.825. Wow. Average 3.58 or 3.6, up 28%. Wow. Kirkland Waterfront, amazing investment. Location. Wow, that played out. You know what? Let's look at the Bellevue one too. Now you just got me curious. Bellevue Waterfront. Throw it back up on the board. The median 2.7. Down a little bit. Let's look at it on monthly. Yeah, look at that. Bam, 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 bam. That's because of a bunch of high and lows in the data. Let's look at the average. 4 million, up 5%. Amazing. Closed sales. There's 42 waterfront homes that sold in Bellevue last month. Days on market, 45 days. Percent of original list price. Look at that. Winter, spring market. Ooh, the economy cooling down. Deal season. Shows to go pending, 14. Average property getting 4. Hey, thank you. Always happy to share this data. I just really enjoy talking about stats, the market. As someone who just loves the game of real estate, and we've just played it at a high level since 2003, I do these to just kind of share with you guys what we're seeing in the market, to answer your questions, to be here for my agent friends, to be here for the consumers, to be here for our investors and share this data. If you have questions, because we're nearing the end of our time, drop it in the chat, or if you're watching this afterwards, drop it in the chat. If you're on YouTube, hit that magic subscribe button. We'd super appreciate that. Share this with someone who needs to see what's happening in the market. And I will close with this is rates are trending down. It's going to get busier. We don't have enough inventory, so that's going to cause prices to rise more over the next 12 months than they did in the last 12 months. How are you going to create opportunity for you, your family, and your clients during that process? Because I think we're headed into that massive opportunity because we are selling the homes right now today, the same amount of homes. We are in a transaction recession that we did around the end of the great financial crisis in 2012. That means it's nothing but up from here. Go have fun. Have an amazing day. I appreciate you hanging out with me.